Hello everyone, welcome to today's video. It's Sunday and tomorrow is Inauguration Day, 20th of January, and it's also Martin Luther King Day. So some of the markets are closed, not all of them. Forex markets are open. Some of the exchanges, some brokers will be open, some will be closed. So check with your broker. Let's go through some of the things that we've got on. I'll start on this occasion with crypto. We've got longs on Bitcoin, Ethereum, and XRP. XRP is pulling in a little bit this weekend, and Bitcoin's holding strong, and Ethereum is also falling off a bit. So a little bit of a concern on these two, either side of Bitcoin, but Bitcoin, the maxi coin, is holding its ground pretty well. We got up to 105,850, so just shy of 106. We got up to 108,000 and some change the other day. So what this looks like is a bit of a bull consolidation, bull flag, and if you look at this on the 4-hour chart, you'll see the same thing. And we remain long on Bitcoin, just holding these longs. So there's the bull flag formation. This last 4-hour candle tried to dip down again, but just pulled back up again. It's the weekend, so volumes are a little thin, but it is trading. But I don't like the look of Ethereum and XRP. We'll carry on monitoring those, and I'm holding those positions. Right, let's go across to currencies. Dollar index bounced up a little bit after its attempt, only getting as far as a 20-period moving average and the trend line. And as I thought it might, we would try and probably find support there. It has done so far. So no bearish indication whatsoever on this chart. Don't think that this is a top. It's not. We've got a 20 underneath us. We're through the top Bollinger Band. We've got this very strong trend line with now several touches. However, on the next attempt on this trend line, we'll probably break down through it. That's the dollar index, and all the currencies will follow suit. We did try and bounce up a little on the euro and the pound, just flagging a little bit on Friday. And then the dollar yen, same sort of thing, just sort of bouncing up. This is the 4-hour chart. There's the 200-period moving average on the 4-hour. There's always going to be some sort of support. We have broken down through this short-term channel and held underneath the broader and longer-term channel top. Let's have a look at on the day chart. Here's the bigger picture, and you can see how we've most beautifully, technically, as I said on X, probably the CMT traders will love this. And it's a perfect breakout, pullback, double touch, running along the underside of that trend line, which forms the bottom of the channel, and then collapsing through the short-term channel, but only to the 50-period moving average, which is the 200 on the 4-hour chart. We've got to make some progress below there, and hopefully with a bit of luck, we'll hold underneath this red channel going into this week. I'm not the only one to think, and there are more and more now thinking along these lines, that we should see some dollar weakness going into 2025, which is probably something that will help the Trump administration overcome some of the financial hurdles that they will be facing. So where are we on NASDAQ and S&P? Well, we've actually gone short on NASDAQ, as I said in the last video, at the top of this channel, and we're now waiting to see what happens next. It does look like this channel has been defeated, and I'll be ready to hedge this at a moment's notice. I'm hoping for a move down into these two blobs down here to form a much longer, perhaps bull flag, something like that, but a slightly longer channel really, down into some of these areas where the 200-day moving average is, and the bottom of this long-term channel. That's been holding for a very, very long time now, and it's just begging a retest of that channel bottom. But for now, we're pushing on higher. We didn't close quite above that little inside channel top, but maybe we just did actually, probably on the line. So we're short on the NASDAQ, and that's about it really. We're also long on Tesla, and we were long on Coinbase. We've taken profit on that now. We've got nothing on MSTR, MicroStrategies, Nvidia, Apple, or any of the other sort of Magnificent Seven big cap tech stocks. We'll be watching very closely going into next week to see how all of this starts unfolding. The inauguration is tomorrow, and it is quite possible and even anticipated by some that this inauguration event will trigger a bit of a further downward movement in the stock markets and possibly the bond markets too. So we'll be watching this very closely to see what happens after tomorrow. So generally, we're pretty mixed on stocks, short on NASDAQ, long on Tesla, whereas on crypto, we're bullish and long. This is the 4-hour chart. Actually now, just on this rollover, just making a bit of a bounce there. Very pleasing to see as I'm recording this video. Let's go across to energies. Well, natural gas I talked about in extensia on the last video, and we've still got the same pattern formation, making higher highs on the Henry Hub price over at the NYMEX. This is on my broker at Black Bull. But on the spot or continuous price, we're actually making lower highs. As you can see, the same chart, I'll put them side by side shortly. So making slightly lower highs each occasion. Whereas on the Henry Hub futures price, we're making slightly higher highs. So there's a bit of divergence between the continuous price and the spot price. Please have a look at the last video. I'm not going to go through this in too much detail now, just to say that we're flat. And by flat, I mean I'm equally hedged at a price lower down from this in the mid-threes, And so I've got some profit on the long side and a negative on the short side. We're hedged at basically break even, which means I've got no skin in the game on this trade, apart from having two open trades, one in opposite directions. So I'm keeping that hedge open because it costs me nothing, and I'll be able to nimbly adjust the direction of that hedge, either fully or partially when I see fit. But right now we're still diddling in the middle, and perhaps this is also best viewed on the day chart. And as you can see, we're right back at 3.9, having made a top at about 4.3. Very, very messy contract, this one. And we're literally right in the middle of the range, roughly from 4.2 or 3 down to about 3.4 or 5. So not much to say about that. But having the hedge open keeps me nimble. I can start to adjust or remove one side of the hedge or the other, depending on where we go. Let's see if this weekend opens up with a gap. It may well do that, and that could give us some direction. If you want to have a look at a very brief analysis on the COD report, please look at my video last week on natural gas. Going across to VIX and the 10-year yield and TLT. VIX is still following pretty much the path that I thought it might. Nothing of interest right now. And this all depends on the way the stocks and the options markets go post the inauguration, I suppose. And we'll see whether this market's moving up and therefore the VIX down, or vice versa. So 10-year yield dropped off as well last week, making a beautiful top at the 618. I covered this in some detail in the previous videos, breaking down through that trend line. It's a very short-term trend line, so not that significant. Reaching the 20-period moving average here on the day chart and just trying to bounce there a little bit. The overall path that I think we could or should follow is this little green path down to the next longer-term trend line and the next Fibonacci level, the blue level, which is the 61.8% fib. It's also where the 50-day moving average is. So that's what I'm hoping for on the 10-year yield. That should bring the dollar down and give a little bit more impetus to some of the other stocks and things that we're trading, like Bitcoin, the stock indices, although we're short on the stock indices. But Bitcoin probably will get a boost if this carries on moving down too. As a result of the 10-year yield moving down, we got a little bit of a bounce on TLT last week, which is most welcome. We don't have a huge position on this, but we are positioned long. You can see where my tranches are. This doesn't form a big part of my portfolio, but nevertheless, this languishing at the bottom, and for those particularly bond market traders and the whole bond market in general, has been a very, very painful experience after we started off bouncing off that level there, breaking up through the trend line, getting a bit of go up, and then in the last couple of months just meandering down and even collapsing down. So putting a lot of bond traders on the wrong side of the market. And that pretty much covers the entire bond yield curve, all moving up, even the much longer bonds like the 20 and 30 year. This is the 10 year that we're looking at here. Right, let's have a look at some of the softs and commodities. Cocoa just bouncing up again. We have not changed this position. And until we get down into some of these levels here, particularly this yellow sort of order block support and resistance line, I won't be doing anything on cocoa, certainly not unhedging at this point. So now to do there right now. We're also long on sugar. That's dropping down a bit. I'm looking to take another long tranche on sugar down here. Once again, this is not a huge part of my portfolio, but it's annoying nevertheless. We're right down into support on sugar. And whether we can hold here or not, I don't know. But we'll be trying again if we get back down into this yellow block. We're pretty close to that now. And then once we get in there, we'll try and take another long position if we do get in there. And then I'll hedge the entire lot if we break and close beneath the yellow zone. Soybeans, I'm just going through these relatively randomly. There are long tranches, all three of them. We got a bit of a go up in the last couple of weeks, looking quite good. Targets up here somewhere, and probably the underside of this trend line. I think we could get a lot higher on soya, and probably up into about, 1170, maybe even 1280, 1290. I think that's the most likely area for soya to reach for in the coming days, somewhere into this range, just below 1300. We're also long on wheat, no changes to that. Two tranches long, one there, and we're above the first tranche, a little bit of profit in there, but below the second one, so that one's negative. Again, sizing is really important. I don't go full on some of these commodities, knowing that they're relatively unpredictable and quite difficult to trade. But they're all at quite low levels, so I think there are opportunities, except for some of the luxury goods like cocoa and coffee. We'll come to coffee shortly. This is orange juice. Our last short on orange juice was over there. We've now come down to this line that I hoped we would break and close beneath. We broke and closed beneath it, but only very, very briefly. We're back above it now, and we'll see how that goes. But still pretty much sideways. Now coffee, we're also short on this one. And so we're short on coffee, orange juice, and cocoa, what I'm calling the luxury commodities. We're basically long on everything else. So here we are on coffee, moving sideways and getting squeezed or coiled into a very tight corner. We could make this a triangle and surmise that we've got a descending triangle here, something like that, maybe, I don't know. We need to just stay below this line in order to confirm that. But as soon as we break below here and close back inside this zone, somewhere in there, based on price action, I'll look to add some more shorts to the coffee trade. Corn, unfortunately, the one that's doing the best, we actually took profit on over here, having got in down there. We got in long around about 4. We got out at 4.6 something, 4.63 I think it was. We've held sideways for a couple of days there and just moving up. So perhaps if we continue to hold above this line here at about 4.62 and also this rising trend line underneath, which will meet up soon at the beginning of March. So it's possible that we'll just go sideways, but we'll be looking, if we do hold above this line, looking to buy into dips again if this continues to show strength. And we'll try and get the next leg of this movement up. And then cotton, very, very cheap down at these levels, and movement in the price has almost come to a halt. And well, I mean, you can look at this chart. You can see how frustrated cotton farmers and the cotton industry might be as a whole. These are pretty low prices. We're looking to see if this can hold above this green line. These lines are equidistant, as you know. We've got the trend line sort of pressing us down from the top, but we've got these 3 lines. We've been trading between these 3 lines ever since the 5th of June last year, bouncing off the bottom, faffing around in the middle, bouncing off the top. And we're now back at the bottom and holding, believe it or not, although it looks like it might want to collapse down. Allow for a quick spike down here and then back up. And if we close above this trend line, it might be worth having a go to the long side. Finally, I need to go back to WTI oil, which I neglected to do whilst we're on the industries, and we'll talk about uranium too. We have 3 tranches short on WTI, one from there, one from there, and one from there. That's the last one we took, and probably the most significant one, and forming a reversal off that long-term channel. It was a long-term target at the top of this channel, although I didn't think we'd ever get there. We eventually did. We spiked up there. This is the 3rd touch now, after the initial one. So there's the initial start. 1 touch, 2 touches, 3 touches. I'm hoping that this one will hold and drive the price of WTI oil back down, looking for a move down to these lows again at about 66 to 67, and a break and hold below there should take us into the very low 60s and into the 50s. So that's WTI. Sorry, I didn't mention that earlier. And then the uranium trades, we just took another long tranche on UEC and URA on Friday, and these are bouncing off these lows. Let's have a very quick look at the chart. Pretty much sideways after that big rush up since September 23. Lots of sort of dramatic movement in between, and we've been basically buying the dips. We've now got another dip on URA, and we just got some long positions there, and we also took some on UEC, both dipping into support levels, moving averages, Fibonacci lines, and previous support and resistance. We took a long trade on UEC on Friday. There's the 200 period moving average on this chart and the 38% Fibonacci level. So I think that's a pretty good zone to give it a go. So that's all for today, folks. If you like inaugurations, I hope you enjoy the inauguration tomorrow. It is a holiday, Martin Luther King Day. So for those in the US who are taking the time off, enjoy the day off. Recharge your batteries. I'll see you in the next video. Take care.
Buy low, sell high, that's the art. Come on, swinging every trade, got the market in my heart. Swing trade, it's the name of the game. Oh, yeah. Moving with the rhythm, never stay the same. Catch the wave, ride into fame. Profits rolling in, ain't that a claim? Charts looking groovy, trending all night. Ooh yeah. Buying on the dips.